Tom Hartman, and I built this signal group because I know what it's like to trade in the dark. Second guessing every move, chasing
The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
Welcome, everyone, to Sunday Fuel for December 7th, 2025. I am your meek and humble host, your defense against the dark arts, your messenger to the Lord of Liquidity, Tom, Sacred Prophet Hartman. Forgot my name there for a little bit of a second.
Well,
I was
your name gets
channeling.
longer and longer every stream.
Yeah, the first of his name, the whole thing. Absolutely. I'm joined, as always, by my Aaron and Trainin and plucky sidekick, Peter, Bad Guru Hartman. How's it going, Peter?
It's going good. It's going great. It's going okay. It's fine.
Nobody cares. You know what people do care about? Markets.
My blue background. What?
Actually, I like this. I like this blue, yellow. No, go back to the blue background.
What? You don't think it's too much yellow?
No, it makes it look like a... first, it looks different, and it makes you look like an invincible character.
Well, I like that. All right.
Yeah.
Cool.
Yeah. Peter, liquidity.
Yes.
People want it. They don't know where to get it. Today's show, we're going to go over the markets that we're paying attention to, but I want to reiterate more than ever before that we are in a trader's market. That's right. If we think we're going to be getting liquidity pumped in like we saw before during COVID or over the last 15 years with zero interest rate policy or during the housing market, the whole big short housing market where everyone can get a house even if they have no job, or the dot-com bubble, those days are gone. What we have instead is liquidity still being pumped into the market, but with a couple of noticeable differences, which we'll talk about during the course of the show. Peter, how do you feel here? Do you think that we should start off with the levels that people are looking at, or we should start off with like what's really yucking my goat?
Yucking. Start off with the levels, and then I want to hear about your goat being yucked.
Yeah, it's not going to be a long show today. I want to really get right to it. One thing I want to bring up is on Bitcoin, talking about levels, we do have the whole, actually, let me just switch this over here. 1 second, Peter. We did had that whole thing on from Saturday to Sunday, which we're going to be calling it Rocket Sundays from now on, because, and this comes from my friend Seb, who named it that, because he's like, hey, Tom, last week we talked about this idea that Bitcoin generally rallies from whatever lows we're at on Saturday up to either the daily or weekly level for VWAP on our indicators on Sunday. And I was like, yeah, that happened. I talked about it last week because my other friend had asked previously about it. And he's like, hey, this thing, why is Bitcoin going up on Sundays? I go, Bitcoin always goes up on Sundays. And then the light flashed in my hand. I go, Bitcoin always goes up on Sundays. Why haven't I been telling people this? So it happened again. I'll just pull it up on the chart. You guys will be able to see it. This is the Bitcoin futures. This is Saturday. Actually, it was pretty flat on Friday as well. But this is Saturday. And then we had a little bit of a dip, which often happens before a pull-up. And then we had Bitcoin rise up to the daily level that was set on Friday. So this happens again and again. We go sideways on Saturday, We get some sort of rejiggering, if anything, right before the close, and then we move up to the level. So that was a, let's call it from the lows here, 1.42% move if you just went to that target, and as much as a 1 second here, as much as a 3% move if you were if you just had a trailing stop. So I do have a strategy, Peter, about this that is going to be added pretty soon to the Sacred Prophet library. That's right. The Sanctum is going to be filled with new strategies. And one of them is this trade that happens essentially every Saturday. So I'm looking forward to that. I think it's something like an 80% success rate. And with 50x leverage, it can be pretty significant.
Wait,
All right.
what does an 80% success rate mean in this context? So you telling me this is guaranteed money? It'll just print you money. Here you go. Take it. It's yours.
No, so there's different strategies out there, right? So the scale, the spectrum of strategies are as diverse as the types of traders that are out there, right? It depends on how much risk you're willing to take, and how much what's your style of trading. So, for example, a 1% to 3% move might not be enough to write home about for a long-term investor, right? It's not a dip to buy or anything like that. And it often will give back that whole thing. So it's not something that some long-term person might want. Right. And if you are a scalper and you're scalping off the 5-minute or what have you, just because you're scalping this move up doesn't mean you'll make any more money, right? Because you can get stopped out 3 times before you even get to the peak of the run up. It depends on your entries. So but the 2 general strategies when it comes to short-term strategies that I'm going to be talking about and added to our library are things that are either good for prop firm trading, so for intraday trading, or for crypto futures, right? So what happens is that when you are dealing with 50x leverage trading for crypto futures, and this only works on crypto futures because prop firms aren't open from Saturday to Sunday when the trade is actually happening, which is one of the reasons why I think the trade happens. What happens is that if you have an 80% success rate, then you have more confidence to place a larger leverage trade on it, right? Because it's a higher probability of success. You have a target for where it'll get to. And so you can take 1, 2, 3 bites of the apple at 50x leverage without betting too much capital to it, and then take the trade. So when I hear 80%, I go, okay, that's great, but the trade only happens in one window from Saturday to Sunday. It's not something you're going to be running all the time. So if I have low number of trades, high rate of success with a clear exit, then I just work on my entry, which I know happens in a certain window, and that 80% gives me confidence in order to attempt to trade 1, 2, 3 times at 50x leverage. If I was doing, sorry, I just want to mention that if I was doing the other strategy, the dual strategy that's going to be launching on the Sacred Prophet marketplace soon. Well, it's not a marketplace. You get it for free with your subscription. The strategy is a scalping strategy. So that strategy runs at, I should probably just show it here right away. That strategy runs at 64, around a 64% rate of success. It's eking out a profit factor, but what's great about it is that it takes many trades. And so what happens is over time, you can see last week, ran it for the week, and it was profitable 4 out of the 5 days and ended the week up $800 or nearly $800. So this type of thing is great because this is what I like to call a 5-step, 5 steps forward, 3 steps back sort of situation, where I'm taking more risk than I'm gaining. It's like a negative RR strategy, but I'm scalping along the way, and I'm able to generate cumulative gains this way. So that's where a 60% or even a 54% strategy I wouldn't mind, because it's sort of incrementally making money over time. So there's different types of things we'll have to the store.
The reason I wanted to ask you this question is because I've been seeing some comments. Well, I saw one comment, but maybe there's more. People calling you a scammer, a con artist. You talk about 80% success rate. People are going to think, hey, yeah, you didn't see the comments? I sent it to you.
I don't look at comments that don't praise me, Peter. I'm sorry. That's what you're here for.
Yeah, someone mentioned calling you. I mean, I find it funny. Keep it coming, everybody. I really like that. But someone was calling you a scammer. Let me see if I can see the comment here.
This is from last week.
This is from 3 days ago. You're a scam. You're spelt incorrectly, but you're a scam. And then someone talked about government needs your Bitcoin. LOL, they don't care about your bits. They want the value it once represented. As soon as that has been extracted, it can be discarded. So that's not calling you a scammer, but that is criticism, I think.
I mean, both of them are dead right.
Okay.
I mean, you might be like, hey, Tom, how can you call yourself a scammer? If you hear me as a scam, if you think I am a scam, that's what it will be. If you do not have the eyes to see or the heart to feel, then
Okay.
truth feels like a scam to you. And I
Right.
am not going to gainsay you. Like the Lord of the Bible, the previous Lord, not the new Lord of liquidity. It's
Blasphemy.
it was V1. It was V1 Lord. The Lord of liquidity is V2, but V1. That Lord will harden your heart and send you a lie. Why? Because he loves you so much, he wants you to feel comfortable, even as you're on your way to hell. Okay? So, yes, it's a scam. Yeah, I'm a scammer. There.
Way to rebuff them. Nice rebuttal.
That's right. Can we get back to the real business of making money?
Yes, we can.
Yeah.
Yeah.
All right. So since we're on the Bitcoin chart, let's take a look at the levels that are coming up for the week ahead. The week ahead, we are still in neutral. Well, we're in neutral territory right now for Bitcoin. I don't know if I said that before, but essentially, we are. If we take a look at the longer term trend, we are below the yearly average. So we're below this red line, the yearly wave, which means we are potentially in bear market territory. I am definitely not looking for longs from here, or medium term or long term longs from here. As long as we're below this level, I like to short from this level because then we're going to have we should have more of these waterfall moments. If I'm wrong, I'm wrong.
How can anybody look at this chart and understand it? There's so much going on. Is this like normal for traders?
Does it look like it's so much going on here?
Looks like my daughter drew it. Looks like she's like, this is a cow.
A little bit.
And then she showed me your chart.
All right.
I'm like, oh yeah, honey, it is a cow.
Does this look like a lot's going on?
Is that its head? No, that's its butt. I go, oh, I was just joking.
Peter?
Look, I'm not saying to remove the stuff.
Does this look less crazy to you?
I don't know. I'm not a trader. You tell me. Like I don't know if what was there before. People really like it. It makes it look good. I really want that on my chart. I don't know. You tell me.
All right here, Peter. Let's just get back to what we were doing. All right. So here, Bitcoin fell. This is, Peter, let me just explain it to you. This is what it looks like when the price falls down.
Oh my God.
That's what it looks like. And this fell down below this red line over here. And because it fell down below that, it's bad.
Okay.
So the question is, I'm only bullish if we get back over this level. And really, we need to confirm above that level. So until we get above like 98,000 and confirm there, I'm not really looking to, for the Lord of Liquidity is not saying that we're going to have some big run up there. So what we're seeing over here, this is a bear flag. So as we fall down, this pattern that we're seeing is a classic pattern that we see. It's what we should expect is a continuation of this trend. So what usually happens in this area is that the price moves up once, twice, a third time, and then dribbles down over here and falls down. We've seen this time and time again. If you go back to the previous cycle, let's just see if we can scrub there real quick.
Time to short Bitcoin. Short it. Short Bitcoin. Do I have that right?
Well, Yeah, exactly. Time to short Bitcoin. Well, I'm waiting for the confirmation to really lean into it. Let's head over to.
You got the euro.
2021. Oh. Okay. This is 69. Yeah. All right. So you see how why didn't I just go to the daily chart? It would have been so much easier. So you see how we fall below this red line here. So we have this drop. We get 1, 2, 3, and then continuation. Right? This is a classic bear flag pattern, and we see time and time again. Does it always resolve this way? No, but that's what trading is. You're dealing with probabilities. So here we're having the same sort of thing that's happening with the chart right now. We have a drop, 1, 2, and I believe we're going to have another third up, which will bring us to around somewhere. It'll be somewhere on this red line. So it could be 95,000, it could be 98,000, whatever it is. And then I would expect that's a perfect time to short in order to head down lower. All right. And if we're going to head down lower, how low can we go? Basically around the $50,000 range. 50 to $54,000 range is what I'd be looking for the low in of the bear cycle. And it usually takes between 365 and 400 days for that to occur.
Is this good news or bad news?
It's just news for traders. All right. So you just trade whatever you're deciding to trade. I'm not giving any recommendation for anyone to do anything specifically. Do your own research, not financial advice. I'm just waiting for the price to move back up to around 95, 98 in order to short it lower, to hold a 50x leverage short lower. And if it pops back up and I'm wrong from there, I'll wait for some signs of liquidity, and then I'll go long from there.
I'm getting sick of this. Not married to my prediction. I am looking for the certainty of a religious fanatic. All right. You're supposed to be in communication with the Lord of liquidity, and I'm supposed to be following you, and you're supposed to be telling me what I should do, what I should buy, and with confidence. So I want you to fix my Bitcoin, please. Fix it.
What you want to do is not buy anything. We are in a trader's market. So everything now, to me, is short term. We're done. Peter, we're going to take a look at that a little bit later on, but the liquidity is fading. They're going to be adding more in, right? Let's just be clear, right? They're going to be adding lots more liquidity, but there's all these tailwinds inside of the economy that is just going to make it so that liquidity might not flow to where it needs to get to. They're going to try all kinds of different things, but I don't think this is a bull market. I think this is a crab market. We're going to go up, but sort of sideways, and it's going to be like tough the whole way through.
But we got Scotty B, the Besant, our babe Besant. He's out there doing great things, doing the Trump's work, doing the Lord's work. I thought he was going to goose this economy, get things going. Tariffs were going to bring in money, get rid of the illegals. Like, what's going on here?
If he was going to do that, then Scott Bessent should have became Fed chair, be Fed chair and U.S. Treasurer at the same time, full on in. No, he decided he didn't want to do that. So now we have to deal with Hassett or Waller or some other person we don't know yet, learn their idiosyncrasies before we can figure out what's going to go on with the markets. So it's not full on green lights everywhere. Trump administration is taking whatever it needs to do in order to get the market moving. That's not happening. What we're seeing instead is that the fiscal side is trying to do foots around the corners in order to try to do things. And then we have on the monetary policy side, the Fed, they're trying to look like they're not listening to what the Trump administration is saying. So even though the data is saying, hey, you should be doing dramatic changes, they're like, no, we're not, because we don't want to be politically inclined. These are all tailwinds, Peter.
Yeah, I know. Tailwinds is like CNBC speak of saying, Titanic. The Titanic.
Oh, sorry, headwinds. What I'm talking about, headwinds. They're headwinds, not tailwinds.
Headwinds. So, are we in a Bitcoin bear market? Is it over? How low can Bitcoin go?
50 to 54,000 is the low end of the range I'm looking for the end of the bear cycle. But I don't know yet because we haven't had the confirmation yet of Bitcoin below the yearly volume weighted moving average.
What does the load of liquidity say? What does your heart
It
tell
says,
you?
wait. Leaves are turning brown, and the sky.
Nobody
If
wants to
I'm
hear you
too,
sing.
I'm too good, I'm gonna get a copyright strike.
Yeah, I don't
And the
think you.
sky is
I think you're safe.
gray.
No,
Peter,
I
not
don't think.
harmonizing.
Okay. That's not working. Let's not do singing. They will official proclamation. There will no longer be singing on the Sacred Prophet Show.
Okay, that's not true. And Peter, let's just erase that from there because we will have singing because everyone likes it.
I don't think they do.
They do. All right. Let's just take a look at the levels and then we'll talk a little bit more about the liquidity before we head out because there's strategies to be made and monies to be won. Futures are open right now. And trades needs to happen. All right. So for Bitcoin, since we're already on the Bitcoin chart, let's take a look at the levels for the week ahead. We are currently at 89,900 on the Bitcoin chart, and the level to be for the week will be 89,227. Yes, that means that the likelihood is that we head down. I think this is the first week where we've had the weekly level be below the price that we're at right now, if I'm not mistaken. So 89, what was that? Yeah, 89.1, 89.2 is the, sorry, my mistake. Scratch that. Start that again. The weekly level is going to be 89,796. We'll know more about that in the next couple of hours, but we're hovering around that level right now. All right, where we are right now is the level we're aiming for. So that means there's no trade to take. There's no amount of distance here that'll confirm a bounce. We're going to have to wait for the price to move on Monday and then take our trade from there. For the NASDAQ, for the NASDAQ, the weekly level is going to be 25,560. 25,560 is the level below us where we would be targeting for shorts. So we'd be expecting a pullback to that level. The upper end of that range, though, is there is a daily level at 26,120 that's been calling us upwards. But we have a slowdown in the trend, as you can see here. So it's all about this week to see what happens. There are all kinds of levels below us. And so if Bitcoin falls and the NASDAQ falls, we can fall all as far as 23,711. I wouldn't be surprised in order to make a new low. And that would give us about 2,000 points to the downside, which is about $4,000 per micro contract or 40,000 per mini. That's right. That's how much money is there to be made on just one contract if you're trading it. For the S&P, we're looking at a level of 68.53 to the downside without really any levels of the upside to speak of. So if we don't get to all-time highs, and there's nothing here calling us to all-time highs, we can get as low as that 68.53 level, or go, if we do that whole complete retracement to a lower low, the level to be targeted is 65.15. So that is 5% down and 367 points on the S&P. For gold is has the level for this week at 42.50 with a downside target of potentially 41.71 and no upside range. But we are holding above the long-term trend line for that. And so even though I can expect a drop to that level, I could totally expect a move up. But we'll see, because the final thing that we take a look at, which is the dollar is in neutral territory. That's that yellow here. We're in neutral territory. It did fall back into the range, but even though it broke this higher high, higher lows situation, we're still, generally speaking, in an uptrend. So we'll see how that goes. As long as the dollar stays above 98,467, I would say this is still bullish. And anything below that, we could be looking at massive liquidity being injected into the markets. But we'll see. Again, leaves are turning brown. It's autumn. We don't know if we're going to get a second summer, a last, Indian summer, or if we're going to have winter come hard. So those are the levels, Peter, for the week ahead.
However,
yeah, let's hear it.
You hope what?
No, I hope that these levels are useful for you as you start on your prop firm journey, which I insist be pretty soon.
Because you think that's where the money is.
Yes, 100%. I know that's where the money is.
It's good news that Bitcoin is going down because we know the levels headed down, no?
Yes, but we haven't confirmed it yet.
Yeah, I know.
So until we
But
confirm it-
when it gets confirmed,
Oh, yes.
we can
100%.
make as much or more. When it gets confirmed, we can make as much or more money with Bitcoin going down than going up, because up is blue sky territory. You're uncertain about levels. Going down, we know what those levels are going to be, or we have more knowledge about what those levels are going to be. So everybody out there hoping for 250,000 Bitcoin, don't have to be too disappointed. Sacred Prophet has got you covered.
Absolutely. Invert the chart and you might as well be in a bull market. So what happens with the level down, there's two types of ways that you people tackle it, right? The first one is that as it's falling, you're like wondering, I don't know, is this the bottom, right? It fell 25%, 50%, 60%. When should I buy the bottom in? And in the last cycle, I talked myself out of the bottom at 17,000. Like I just talked myself out of it, even though the signs were showing, hey, that's where the bottom was. Because I had tried to time the bottom again and again at 50,000, at 40,000, 30,000, 20,000. And I just tried to time the bottom. And it's painful when you do that. And then you immediately get into a drawdown of 30%, 50% because of a bounce back. Well, now I'm not really going to be buying to catch the bottom until around 50,000, 54,000. I'm pretty confident that's as far as we'll go. And I'll be eagerly buying there and not buying beforehand. So that'll save me a bunch of grief. Then on the other hand, if I want to trade the drops, well, I can be pretty cautious in a bear market and just short the spikes. When it spikes and tries to come over, use whatever tools you want. The Sacred Prophet library is filled with useful ones. I could just be shorting and take my money from over there. And if I'm scalping, who cares? I can just get just enough in order to make thousands and thousands on every one of those drops. Fine. If I want to be even more degen, I could buy the bounces and sell the tops. I could buy the bounces and sell the tops again and again and again, all the way till I get to the bottom, and then use all that money that I bought in order to buy more at the bottom. I mean, that to me is just what a way to go. That to me seems so fantastic, a way of trading. So there's so much more money to be made on the downside, whereas on the upside, you never know how high the price will go. We just went through that. And people were sitting with max leverage at all-time highs going, hey, I was promised by Tom Lee that and Michael Saylor and everybody else that Bitcoin's going to be $250,000 by the end of the year. How did that work out for you?
And then there's prop firms where it doesn't matter if it's going up or going down, you can make money in prop firms because that's just trading, day trading.
Yeah, that's a whole other kit and caboodle. That has nothing to do with liquidity, has nothing to do with any macro trend. That's one of the reasons why I like it. Your positions are closed every day. And I heard someone, Forex Ike, say that the other day. He goes, sometimes the market closes and I make money that day. I couldn't tell you if the market was up or down that day. and I get it. It just
are you finding that your indicators are helping you with prop firm trading?
Oh my God. Yes, absolutely. Now I'm on the kick of the whole reason I trade manually with my indicators is to figure out what kind of entries are reliable so that I can then automate them.
Right.
So that's what I've been doing. I've been talking about the dual strategy, which is one I showed earlier today that generated $800 last week, just minimally on an account. And you might think $800, that's nothing to write home about, but you might not be understanding how prop firms work. If you get something like that working, well, then you can daisy chain 5, 10, 15, 20, 25, 30, 50. Some people have 80 accounts that they tie together. And that $800 times all those accounts are thousands and thousands and thousands of dollars. Right. Some people are making $50,000, $60,000, $75,000 a month if they can trade properly, or one-time payouts of $100,000. I'm perfectly happy to do that. That's more than enough money for me. And so That's what's so exciting about having a strategy doing that. Now, the problem that people normally have with prop firms is that they can't get out of their own mind. They can't get out of their own heads. I found it for myself. You get so caught up, you get close to a payout, or you had a really great week and you think you can do no wrong, or maybe you made a mistake and you want to chase back that money and you think to yourself, well, the prop firm account only costs X amount, so it doesn't matter if I lose it, I could always get another one. And you get into your head about it. But making the strategies, making the tools that help me figure out how to trade better manually, or creating strategies that can generate money over time without me having to be there, both those scenarios have been just absolutely a game changer. Waking up and knowing my strategy took 8 trades last night and 7 of them were profitable, start your day off right.
Here's a question. I know we got to go, but here's the question that everyone's going to ask. If you have something like that, a strategy that is profitable, it's going to work for you, why would you offer that to anyone else? Why don't you just commit to that, use that to make money, and forget the rest of it?
Well, that's sort of like silly. Like, there's always no strategy, nothing is guaranteed. Nothing's 100% guaranteed. So why wouldn't you have other income streams? It's sort of like the person who has no savings. How are you going to quit your job and do day trading? Like, that's not going to work. You need money in order to pay for what you're doing. And then you got to be dang sure that there is no black swan, that there's no you going on tilt, that nothing bad ever happens, that you don't lose your health, and nothing, that all that works absolutely perfectly for you to be like, let me just dive down into this thing and let that be all that it is. That's sort of silly and ridiculous. Plus, that's not how human beings work. Like, we don't do a thing where we go, we found out something great, let's not tell anybody ever. We're all designed specifically to tell you that's where the apple tree is. It generates apples. Why? Because it creates serotonin within our body. It creates it makes you feel more confident. It makes you more pleasant, more charismatic. You gain status within other people. It's like if someone came up to you and just walked up to you and said, you know, your friend is not even your friend, just a person, and they're like, I became a billionaire. How? Not telling you. No one can find out how. I just did it secretly. Now let's go on a trip. You'd be like, this guy's weird. This guy's strange. Some guy comes with a bushel of apples walking around and go, how's your week going? Why don't you tell me about how you got your stuff? No, I just keep my things to myself. I want to sell. Peter, it's ridiculous. It's insane when people say that.
From my point of view, the Jedi are evil.
Those people are crazy. Doesn't make any sense. Of course, if you find something good, you want to share it with the world. How else, Peter, what you want when you get the 8-ball in the corner pocket is to, that's a pool thing, right? 8-ball, right. That's a good thing.
That's a good
You want
thing.
to call it. You want to call it. You want to say 8-ball in corner pocket so people go, it's a fluke. No, I was meaning to do that. Anyways, I hope that answers the question. Doesn't make any sense to keep things that are valuable to yourself. Crazy.
Well,
plus,
yeah,
I get better with people's feedback. Right? As I trade in front of people, I had this accountability. As I had this tools, I had this accountability. I don't fudge it to myself. And as people give me more feedback, I'd be like, oh, that's a great piece of information. Oh, yeah, I could actually filter out my trades that way. You get to use the hive mind, the IRL LLM systems, if you will, in order to make your things better. The more money other people make, the more money I make. I've said this.
Okay, that part I understand, but the concept of keeping things to yourself, whether you're talking about patents, you don't think OpenAI should just let the Chinese scientists just into their offices and just share everything. There is value in keeping things to yourself to some degree.
To be fair, one, I'm not putting the code of everything they're doing perfectly out there, so it is private. I can retract it whenever I want to if I feel like it. And we only allow a certain number of members for a group anyway. So it's not like I'm trying to get on CNBC and get the whole world doing this.
But you are profiting from other people using it. So it is another income stream. It's a smart way to use every part of the buffalo, right? You can use bot, you can use a strategy to make money. It's not guaranteed, so you can use that in order to help other people. Maybe it helps them to make money. Maybe they build off of it, or maybe you provide criticism for you in order to make the product better. So it makes sense. I have to ask.
Fair enough. Fair enough.
So did we talk about the yucky schmucky stuff you're talking about?
Yeah, so I just want to hit on a couple of things. I'm going to be talking about it more on Daily Bread. I didn't do the Daily Breads last week, guys, because I've been completely revamping sacredprofit.com. And the new version is going to be coming out. Showed Peter today, showed the other members of Sacred Profit today. I think it looks good. It'll give you way more control, way more flexibility, clearer for people. Before, we were really more crypto focused, so I thought that's what people wanted, and I wanted it to be free, and people who signed up as an affiliate with a crypto exchange can get access for free to the site. That will still be the case, but there are people who are like, I don't want to do that. Can you just tell me how much it costs per year? I'll just pay it and move on with my life. And I go, okay, yeah, that's fair. We should give that option to people. Plus, people wanted to trade other things: NASDAQ, SPY, gold, all kinds of different assets, poly market, all these different things are coming onto the platform. So that's what we've been working on. So I didn't do any daily breads last week. This week, I'm attempting to do daily breads, but we're launching the new thing. So, but what I want to be talking about is the whole liquidity thing. So the problem with liquidity is that, well, I don't want to give the whole song and dance of where liquidity comes from. Just suffice to say that there are headwinds to what's going on with markets, right? So we know that the Fed has a dual mandate for inflation and employment. So let's just take a look here at a post from a couple of posts on X that talks about some of the dilemma that both fiscal and monetary policy is in. All right. So first, let's take a look at the 10-year yield. So we've been talking about this. If we look at the 10-year yield on the chart, you'll notice something very worrisome, which is that long-term yields, that's these guys in blue and purple, these yields are going up, whereas this is the yield curve. One second. Yeah, so you'll notice that these yields are going up. So these are the 5-year, 10-year, 20-year, 30-year bonds are going up. And then over here, the orange ones, the short-term yields are going down. This is what's called a bear steepener. That means that the expectation long-term is that inflation will come back and that growth is suffering. So this is problematic. That's why yields go up on the long term. And on the short term, it's saying that things are so bad that the Fed is going to have to cut and try to pin rates on the short end to get them down in order to provide an ability for people to refinance, for the government to refinance and all that sort of thing. But this is an unsustainable regime. You can't have short-term rates falling and long-term rates climbing. Like, that's going to be absolutely crazy and not good for the long term. So this means there's a liquidity issue happening. This all in the midst of the dollar, again, in neutral territory, but it hasn't completely broken its uptrend. And we have issues with the Fed. So if we take a look, Jeffrey Snyder said this on December 5th. He says, the market has spoken. The Fed is going to cut rates next week. That's also the bad news. You guys will remember that the odds of a rate cut dropped precipitously after Jerome Powell said that it's not guaranteed that they're going to cut in December, which is forward guidance for, hey, market price out that cut, which is what it did, and the markets went down. But Jeffrey Snyder is reminding us that when the Fed has to cut, and it's at the beginning of the rate cutting cycle, that's the bad part for markets, because it means something bad is happening. So for all the noise from various Fed creatures talking up inflation, tariff inflation, in the end, what really actually matters is the real economics of the labor market. There are too many warning signs coming from all over the place. Even the Fed's beige book for November was filled with references to worries over layoffs and almost none about inflation. In other words, Casey Smith, rate cut dissenter, has even less to stand on now that he did when he was all over the mainstream financial news last month. The Fed is cutting The Fed is cutting next week. Done deal. What follows after that? So he's in the camp that inflation is not an issue at all, and we saw inflation flat to lower last week, but that the Fed needs to cut because the labor market is going belly up. Meanwhile, we have here, this is a video from the Fed. Give me 1 second here, Peter, to set this up. This is Scott Bessent who says this. This is a quick line from the All In podcast recently, the conference that they're doing. 1 second here. It's very quick, but listen to how the Treasury Secretary is talking about the Fed.
There's no audio. Hey, Tom, there's no audio. There's
Yeah?
no audio.
There's no audio? Okay, let me try that
I don't
again.
hear it.
All right, tell me if you can hear this.
Still can't hear it. I can't hear the audio.
I can't hear you, Peter.
Oh. Let me
What'd you
just
say?
make sure. I can't hear the audio. Make sure I can hear you, but I can't hear the audio. Sure,
Wait,
the
let me just
video
see
itself
this.
is not muted.
Yeah, it's not showing any levels. Oh, wait a second. My mistake. I'm in the wrong place.
But you're not in the wrong place. You're here on Sacred Profit YouTube channel, where we do deep dives into the market every Sunday on Sunday Fuel and daily breaks during the week to let you know what's going on with the markets when you need it. Remember that sacredprofit.com is creating a dashboard that will provide you with all kinds of information that will allow you to trade better. Sacredprofit.com is your place to connect to the Lord of Liquidity. Sacredprofit.com.
Silence!
Okay, you ready?
And we're back.
My worry is that the Fed is turning into universal basic income for PhD economists. Right? That I don't know what they do. They're never right. If you were to
Maybe
no.
you should double the number of PhDs. If you go to 700, they might get it right.
Well, look. I mean, if you were to look at the central value tendency versus how they've done, it's shocking.
Right.
It's shocking. You know, I said, like, if air traffic controllers did this, no one would get in an airplane. My worry is,
I don't know what they do. They are never right.
Sounding like a crypto bro.
I want that on a t-shirt. All right. If someone's supposed to know, someone outside of the Fed is supposed to know what the Fed does, it's the freaking Treasury Secretary. Okay. And he goes, look, I got no idea. Doesn't make any sense. If air traffic controllers did it, we were get off the plane. Well, we can't get off the ride, buddy.
Fire them.
We're on the plane. So that means he goes, we need liquidity. They're not providing it. They're just not providing it. And we're seeing that inside of the repo facilities. We're seeing that everywhere. They're not providing the liquidity. So liquidity is not there. All right. For good or ill, there's no liquidity is not there. Now, some liquidity is going to be coming back in. QE or QT, quantitative tightening, is stopping, is rolling off here in December. And we're going to have they're going to cut rates for sure, and they're going to be doing liquidity injections. We can pretty much guarantee that. But take a look at what's going on over here. So this is a post from Jim Bianco from Bianco Research, who was supposed to be considered to be a Fed governor. So what he says, I take very seriously. So there was a poll that affordability poll that Politico did, and this is what he said. So Politico released a poll this morning with these alarming results. Almost half, 46%, say the cost of living in the U.S. is the worst they can ever remember it being, a view held by 37% of 2024 Trump voters. Americans also say that the affordability crisis is Trump's responsibility, with 46% saying it is his economy now, and his administration is responsible for the costs they struggle with. You would be correct to say that the rate of inflation was worse in 2022 when it hit 9%. So inflation was worse then. But I think the poll respondents are answering a different question. They're talking about the cumulative rise over the last 5 years. And on this front, you'd have to go back 45 to 50 years to remember a worse time. So those under 60 or 55 are correct. I would argue that this is a textbook definition of unanchored inflation. Unanchored inflation is the Fed's mandate. They don't want inflation expectations to be unanchored because people's expectation of higher prices can also cause higher prices. That's why unanchored is very, very bad and very hard to get back into the Pandora's box. The very thing that keeps central bankers awake at night. These results should equally alarm the Federal Reserve, as inflation is its mandate. Jay Powell mouthed the words, inflation expectations remain well contained, and next week's press conference does not make this go away. In fact, it might anger the public that he doesn't care. I really want them to explain in great detail why they think that to fix this problem, they need to cut rates. So here's the problem here with the liquidity. Even though inflation is coming down, which is the rate at which the prices increase, not that the prices come down. Even though inflation is coming down, the expectation of inflation is up. So this will tie the hands of monetary policy to be able to stimulate the economy, because people are going to be like, what are you doing? The last time this happened, it was so bad. Why are you doing it again? And so you can see here that this we want to stimulate but don't stimulate. We want to stimulate but don't stimulate. Add to that the idea of the K-shaped economy. This idea that those who have assets want the stimulus, even though it might cause inflation, because their assets go up more than inflation, so they can afford it. Versus the people who don't have any assets. So when the inflation occurs, they get hit doubly so, because not only do prices increase on their cost of living, but also they can't buy the assets that keep going up in price because they get priced out of it. So that K-shaped economy, where some people want it to the stimulus to happen and other people are hurt by it, plus the political climate, makes this whole liquidity thing a wash. That's how you get in this sort of like middling thing on all these assets, or sort of moving sideways to up, sort of in a crab-like manner, which is why I call it a crab market.
Merry Christmas.
Last week I said we had 30 days for this whole thing to get back to bullishness. 30 days. All right. NASDAQ went up, S&P went up, gold stayed flat, Bitcoin went down, or stay flat to down. So don't pay attention to NASDAQ and the S&P. The NASDAQ will make all-time highs as they lock you in your house and force you to take boosters and vaccines. Don't listen to the NASDAQ. Okay. All right? The options market moves the equity market. So don't look at that. What you want to look at is the coincident indicator for liquidity, which is Bitcoin. That's suffering. And we're not even seeing gold going up with money printing, which is what we would normally see. Plus, yields are rising. So all this is headwinds for liquidity and makes us think bull market, yes, because the powers that be want the markets to go up, but fits and starts. So I'm expecting this all over the place. All-time highs, lows, all-time highs, lows, all-time highs, lows, as the government sends money directly into the hands of people and buy assets secretly behind the scenes. That's it, Peter.
Oh.
That's it for this week. I got to get back. Peter, this code is not going to vibe itself.
I was just going to talk about the Somalis in Minnesota who stole $1 billion, and maybe they can help juice the economy. But I don't want to be controversial here on this channel.
$1 billion? $1 billion? That's nothing, Peter. That's nothing. $1 billion is a round and error. We need $1 trillion. That's what we need. We need COVID stimulus. If someone had, even if I sarcastically call for a new virus to be unleashed onto the world, is that a crime?
I think it's technically incitement of violence. I don't know.
I guess it would be, because I would really, really, really want them to do it. So better not to say it. Better just to leave that there.
That's right.
All right. Guys, it's been fun. We'll be back next week for another Sunday Fuel. But until then, we wish you guys, as always, happy trading.